Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin slash cryptocurrency slash altcoin market update for Monday, August the 24th. Before I jump into this content, please do me a huge favor, hit the thumbs up button. Make sure you subscribe to the channel if you have not already, and make sure you check the description for a link where you can join the Patron for just $7 a month. That gives you access to much more frequent updates and also helps to keep this channel alive. So the first thing I want to talk about is obviously going to be Bitcoin. I think it's a great place to start. We'll talk about Bitcoin, we'll talk about a little bit about the stock market today, talk about some bullish scenarios. Also going to talk about kind of the big gotcha, if you will, the big bear scenario that I think almost everybody has written off at this point, that I still want to make sure that people are at least aware of. Not necessarily expecting it, but it's something to be aware of. So let's go ahead and start with the Bitcoin or the crypto fear and greed index. Right now, this thing's sitting up around 78. That does qualify for extreme greed. And if you look at this thing, we basically have been consolidating up inside this extreme greed area. So I don't know what to expect from this. I don't really think this gives me a lot of information because over the last 2 or so years, 2.5 years that this thing has been around, we really haven't had anything like this to compare it to. We had this spot back in the summer of 2019 where it shot up to extreme greed up around 92. I think it shot up a little higher than that, and that's just what it's saying. 90, 95, whatever, and then immediately dumped back down. But this is kind of consolidating. So is this a sign of distribution? I really don't know. Or is it a sign of reaccumulation like we had back here? I always tend to err on the side of caution. If it's an extreme greed, I'm typically not going to be looking to long a lot of assets, right, as far as US dollar pairs go. So that is something that I would definitely keep in mind. And if you go and look at the stock fear and greed, and we're going to stick on Bitcoin, but I just want to show you this. The fear and greed index on stocks is also fairly high. It's up around 70, 75-ish. And you can see that in the past, this has been an area that has acted as resistance before price pulls back in the stock market. So definitely something to keep an eye on. So the first Bitcoin chart that I want to talk about is actually going to be the weekly chart. And I'm going to take the fibs off. I'm going to take some date ranges off. And what I'm going to do first is just simply talk about this downward sloping resistance. So this is what I was watching a few weeks ago, and then it closed right underneath it. And then this last week, it actually closed, 2 weeks ago, it closed right at it. And then last week, it had this little pullback. So this was indeed a pretty, clean line of resistance. I wouldn't say it was an easy place to short Bitcoin. I didn't short Bitcoin on any type of swing trade. And if you had shorted Bitcoin, there's pretty good likelihood that you probably got stopped out on this wick, depending on how large your stop loss was. So didn't really do much for me as far as trading goes, just kind of gave me a little bit of an idea of what might be coming. So I am still watching that same line that I have now been talking about since the summer of 2019 when it got its third touch. So that is the line of resistance that bulls want to see broken and that bears would like to see hold. All right. Of course, we have our bear market box, which I cannot believe I'm still talking about this thing. But here we are, years later, talking about the same box. So I'm going to go ahead and pull it over. And, if we do start to move back down and start to move back inside that box, that's going to concern me. It's going to make me lean more bearish in terms of crash versus correction. If we just pull back to the top of the box, then start to move off of it, I'm going to lean heavily toward it being a correction. And you can see that if you go back historically, that box has been a really good indicator when there's these big, deep corrections. Even when they go back 20, 30, 40%, they tend to stop right on top of this box, and then you get your next leg up. You get correction back down to the top of the box, and then your next leg up, so on and so forth, right? You can see here that there was one pullback in January of 2016, top of the box, another pullback in August of 2016, another pullback in March of 2017, another pullback in July of 2017. And of course, historically, we know that buying Bitcoin in all those four areas would have been a phenomenal idea to buy there and then ride it up to either its all-time high, or even if you never sold, even if you were just a quote-unquote hodler, right? If you were still holding that Bitcoin, you're up huge, right? So that's what I'm going to watch, because this year, when it did have this crash back in March and then it ran up, you can see that what it did was actually consolidate right on top of that box, which does give a lot of hope to the bulls. So that is definitely the line in the sand. If you want to know where it is on the RSI, it's right around 53. I would call it a range between 52 and 55 RSI, right in that ballpark on a weekly Bitcoin chart. Okay, and this is spot Bitcoin over on Coinbase. So I'm going to watch that with a lot of interest. The fact that it stopped at resistance right here doesn't really mean a whole lot. Doesn't, say, oh, okay, well, this is going to crash now. It stopped at resistance. It can easily just come down this a little bit like it did and then, bust right through it. And if it busts right through it, there's really no, in my opinion, there's really no more resistance left, right? As far as any meaningful resistance until you start getting up around the $16,000 area, which of course we know that if we do a trend extension and we're trying to say, hey, where would this trend end at? If this is indeed an uptrend and we're drawing it from, say, tail to wick, right? I would consider this the local top, with this being the pullback. It gives it a target up around 14.3, right? You can draw some other patterns. You can try to make out, maybe an inverse head and shoulders. It's going to have a target up around 15K. You can try to draw this as, some type of pennant. Same deal. Going to have a target up around 15K. So somewhere in that ballpark, 14,000 to 16,000 will be the next area that I would really be looking for some type of reversal if we're able to break through this line down here. Okay. Now again, that's bullish speak. It doesn't mean I'm a bull. It's just simply saying if that line breaks, that's what I would be looking for. Okay. So let's zoom in. I was going to talk about some other stuff in this chart, but I think I'll just leave it there. Let's zoom into the 3-day chart. Now the 3-day chart, here's what I'm watching. Okay. So I'm looking at this, and this looks a whole lot like the summer of 2019, right? So you had your bottom back here in December of 2018. You had your run up. It was like a 30 or 40% pump. And then you had basically your correction, right? It corrected back down. I don't remember exactly where it went to. I want to say off the top of my head it went to the golden pocket, but let's double check. So here's your bottom, and then here's your first pump. Yeah, wow. Doesn't get a whole lot more perfect than that. Oh yeah, no, sorry, it went right through it. Look, I'm sitting here saying, oh, it gets so perfect. This was actually the 80, right? So this went right through the golden pocket and played around on the 80 down here. So it did have a correction, which is what you'd expect to see in a bull market. And I think a lot of people missed the buying because, they're used to being a bear market with the lower lows and lower lows. But regardless, it essentially at that point went into a parabolic uptrend. Instead of having a nice, sustainable rally, what it actually had was just this basically hockey stick pattern where it almost went straight up, right? And that was the reason that I became, started getting pretty bearish on Bitcoin back there because of how weird this was. But that lasted about 147 days, so just roughly 5 months. And if we look at what happened this time, we once again came down. There was no consolidation this time. We got this real weird pump. And right now, this thing has been going on for roughly 162 days. So this pump is very, very similar to this pump back here. This one went up, I don't know where the bottom was, 33.40, 33.37, okay. So this one pumped up about 315% before it topped out, and then of course we all know what came next. This one that we're currently within, I can't seem to get this darn thing to connect where I want it. There we go. This one pumped up about 223%. So again, could be some room left in this pump if it's going to repeat 2019, right? Absolutely could pump up to that $16,000 level, which 16 grand is right at 315%, right? I'm hoping it doesn't. And the reason I'm hoping it doesn't is not because, oh, I want to buy cheap Bitcoin and all that kind of stuff. I'm hoping it doesn't because if we have another repeat, it's going to make me lose a lot of faith in Bitcoin. I'm already pretty skeptical, as you guys know. I've really, my macro bullishness was kind of killed off with all this weird market behavior, and it reeks of manipulation. And then the drop in March, you had an exchange that literally just shut off so that stop losses could not be hit, and that's the only reason that Bitcoin even stayed above 3 grand. Had they not shut off and had they let the cascading stop losses hit, there's a lot of speculation and research, or a little research, I guess, that backs up the idea that Bitcoin probably would have went to zero back in March, right? So that really killed off a lot of my macro bullishness. So what I'd like to see ideally is some type of correction, a real correction, right? Get back down to that golden pocket area, maybe even get back down to test the 200-week moving average, consolidate, and then start to see a nice sustainable rally instead of these parabolic washouts. Because what you don't see, what a lot of people aren't really seeing, is these are washouts, right? They're not really rallies. I mean, they're rallies in the sense that price is going up, but they're basically just washing out people, right, who are short, and then dumping and washing out people who decide to go long. It's really just a really big macro picture, whipsaw action. So, we'll see what happens. But when I look at this 3-day chart, when I zoom in a little bit on it, what I see is a head and shoulders on the RSI. And what you typically get with a head and shoulders type of pattern is you'll get the left shoulder, you'll get the head, you'll get the right shoulder, and then you'll get a pump that basically retests the neckline. And for retail public, a lot of them get excited and think it's going to go even higher, and they'll go long there. And on the flip side, that gives the big institutional money, it gives them the liquidity that they need to actually short the market, right? So that's the reason that plays out the way it does. So what I'm expecting is some type of move toward this line and then a move down. Now, again, that doesn't necessarily mean, Bitcoin's going to crash to $3,000 or $2,000. It simply means that I'm looking for a correction first, and then if the correction can't find support, then we can start talking about, possibility of going much lower, okay? I think right now you have to play this level by level and be very careful. Make sure you're using proper stop losses. Make sure you have proper, profit targets, all that kind of stuff to really keep from getting caught, because the market is severely overextended right now. All right. If it does start to move down, the first level that I'm going to be interested in is actually going to be this upward sloping green line. It's a little bit steep for my taste, but I'll still watch it and just see what happens if it gets down to that line. And if it breaks through that, then I'll start watching the top of this box in the 3-day chart, kind of like I'm going to be doing on the weekly chart as well. Same deal with the box. This is the bear market box when you look at a 3-day chart, right? This was the box that allowed me to do pretty well for myself in 2019 because I was comparing this area back to this area here, okay? So that's kind of what I'm seeing on the 3-day chart. Let's zoom in a little bit more. Let's take a look at a daily chart. Is this daily? This is daily. All right. So take a look at the daily chart. What I'm seeing on this thing is obviously we still have these same gaps that we've been talking about since, depending on the gap. This one happened in March. This one happened in early May. This one happened back here in July, so on and so forth. So we have these liquidity gaps that are still sitting there. We also have a CME gap down around 9,600, so I'd like to see all those fill, obviously. By the way, that CME gap, if I'm not mistaken, it's a weekly gap. It's not just daily. It's a really big gap that occurred on the weekly time frame. So I'd like to see those fill. Obviously, that would make me pretty happy. But for right now, what I'm going to look for is kind of these different patterns. So this is my pattern on RSI. This is my green line of support. And then, of course, I have this downward sloping line of resistance, which has been moved accidentally, right? Looks something like that. So I want to see which one of those lines gives way first. If it goes north, I'll be looking for more bullish action. And of course, if it goes south, then I'll be looking for more bearish action. It did sneak just below the line back here on the 21st, but we're back inside there now, so I'm not too worried about it, being as close as it was. What concerns me a little bit more about this daily chart is this, potential rising wedge. We don't know if it's a rising wedge yet, but it looks like it's trying to form a rising wedge. Take all the other lines off so it's easier to see. Basically, it is what it is. It's, rising wedge is a rising wedge. If that's what it is, it's already broke south of it, and this very well could be the retest of the support flipped resistance. And if so, then I'm probably not going to get that pump that I was looking for in a 3-day. Probably just going to go ahead and get a down move from here. And I think the first target is going to be down, to fill in this first liquidity gap that exists down around 10,150. And of course, as I talked about in a previous video, if we measure this, the way you work a rising wedge like this is you just measure its height, and then wherever it breaks out at, you just pull it out like this, and there's your target. So in this case, if it broke out right here, which it did, we don't know if it's going to get back in there or not, but if that is indeed the breakout, and if this is the retest, that gives it a target down around 10.1, which of course fills in this gap for us nice and neat, okay? Also, you have to remember that 10K is now a psychological level. We're above it, so we get into the whole, oh, it's never going below 10K stuff again. And I'm not saying that in like, oh, I'm making fun of people. I mean, literally, people start to think that, oh man, I better buy now. It's probably never going to be this cheap again, right? It's a psychological thing, so keep that in mind as well. Now, it's also possible that this is not our rising wedge and that basically our pattern has just expanded some and that we end up getting a pattern that looks more like this, right? And this could still be a rising wedge, but it might play out where it pumps all the way up here to the top of the wedge before it eventually moves down. So, what I really want to see is a break. I want to see a clean break of the wedge. This is pretty good. This is a good start. And I like this retest so far, but I'm a little skeptical about jumping in on wedges because they have this tendency to just extend themselves and widen out, and then suddenly they turn into a parallel channel, which is not bearish at all, okay? That's kind of what I'm watching on the daily. If we look here at the 200 moving average, the daily down around 9K, pretty far off of it right now. Would not be surprised at all to see that getting retested sooner rather than later. And of course our 50 moving average, which is kind of the bullish line in the sand for a lot of people, it's sitting up around 10,650. So again, we're really far off that thing. We're about 10% off of it. So wouldn't surprise me to see either one of those tested pretty soon now. Okay. What else do I want to talk about? I'm going to talk about the stock market in just a few minutes, but what I really want to talk about, I just want to paint this picture, and again, I'm not saying this is going to happen. Just want people to be aware of it. So what I'm going to do is I'm going to open up a clean chart real quick. We're just going to use the BLX chart. It's the easiest thing to do here. We're going to get rid of, we don't need volume, we don't need RSI, we don't need any of that stuff. I just want to show you guys a couple of quick lines that you can keep in the back of your mind, okay? So one of the reasons that a lot of people were calling for new lows back here in March, even when it got down to, I can't talk, 333, when it got down to 3,800 in some places, 3,500 in some places, etc., is because a lot of them were looking at this as one big bear market, one big downtrend. And I was semi-included in that as well. That wasn't really the reason I didn't buy there, or didn't buy more than what I bought there, because I bought like a quarter Bitcoin or whatever it was. The main reason that I didn't buy there had to do with COVID, which I've talked about many times. But I'm still watching this with a lot of interest, because if you draw this, slap it on a log chart to larger time frame. Log chart normally works a little better. Shorter time frames, I don't like the log charts. I like to use the regular charts. But if you slap this on a log chart and you draw this up from the highest close in 2017, okay, which was up around 19K, and you draw it down to the lowest close in 2018, which is down around, if I can get it on there, it's down around 3,800, no, that ain't right, $3,222, I think. Again, this is the BLX chart, so it's a little different on some of the other exchanges, but we're going to go with this. All right. And then we draw it up. If we draw it up to the highest point in 2019 on our counter rally, right? If it was a counter rally, if this is a bear market, down, counter rally, further downside, okay? If that was our counter rally, then what we had this target down around 2K, okay? But we've went higher than that now, so we have to move this over. Oops. So if we put it on our highest close now, which would be back here a couple weeks ago, trying to get it on there, right around 11,918, right? Now look at this thing. You see where it's sitting at? Right down at $2,000, okay? So this could still be what's going on. Is it? I have no idea. No idea, right? Like anybody else, I just have to wait and see. But if this ends up being one big counter rally, we could still make our way down to $2,000. And again, I think that's likely in the event that the stock market crashes. If the stock market doesn't crash, I think that this probably was the bottom, and that at this point, if you didn't buy it, you missed it. Okay. This chart is not making me, I'm not loving the BLX chart for this. Let me pull up a Coinbase chart and see how different it is. Maybe it was the monthly I was using. I did this the other day and it looked a lot cleaner. It looks kind of muddled on that weekly chart. Yeah, this is the one I was doing. I was doing a monthly. Okay. So obviously we do not know where August is going to close at, but just going off of where it's at right now, it's got this bottom down around 2,900. I actually like that target a little better than 2K. And then it's got its 61.8 extension down around 1,200, right? Which makes me happy in terms of satisfies my desire to see this thing go back down and retest the old highs, right? The old all-time highs. So, and this is what I would call a doomsday scenario, right? This is basically, in my mind, this scenario only comes into existence and only comes into play if stocks completely collapse. Other than that, the size of this capitulation tail, the fact that it went down and filled in that gap that I was so eager to see get filled and all that makes this look more like, an uptrend, which would be drawn more like this, right? Where you'd have from your bottom to your top and then from your low, and then you'd have a target up around 20K, right? So that's, the bullish side of that coin. So I just want to watch the levels, and I want to play this very level to level, and I want to be really mindful of what's going on in the stock market so that I can try to play crypto correctly. I'm not selling off any of my crypto. I've got the hedge fund that I've talked about several times. I did the last video where OMG had pumped quite a bit. I did move a pretty fair amount, about half of that OMG. I moved it over to Bitcoin, so I sold the OMG for Bitcoin in an attempt to accumulate Bitcoin or stack sats, whatever you want to call it. So that's kind of the mode that I'm in right now. My mode is I have completely taken my crypto portfolio out of my, whatever you want to call it, net worth equation or whatever. Like when I do my budget, I don't go, okay, well, I've got this much money in crypto. No, it's just crypto, right? It's just, we're not even talking about the USD value. We're just talking about the Bitcoin value. And so the goal with that is going to be to play this as a bull, even though I'm not really a bull. I'm still a bear, but I want to play it as a bull so that worst case, the worst thing that can happen as far as my crypto portfolio goes is it goes to zero, right? I mean, it can't go negative, right? So I've basically just written that money off mentally, and I've decided that, if I'm right, it's probably going to go really low, and I'm probably going to be a little sad about it, but it is what it is. But if I'm wrong and this thing is in a bull market, then at least, I'm playing it as a bull and I'm positioning myself as a bull with what I have. Now, again, not going to invest more USD, not going to buy more Bitcoin, not going to put more fiat in the market unless I'm completely convinced that it's a bull market. But as a bear, I can still trade it as a bull and still try to stack Satoshis, and worst thing that happens is it crashes and, I'm out a little bit of time for the trades or whatever. But I think right now the HODL portfolio is sitting around 2.75 Bitcoin, something like that. It was actually up about 3 points to not up 3 points, but up to about 3.75 Bitcoin a few days ago when OMG pumped. But I was actually in bed when OMG peaked, so I missed selling at the golden pocket on OMG, which I'll talk about in just a second to kind of give you some stuff to watch for in the future. So yeah, these are just a few different scenarios I'm watching. Even if we don't go crashing back down, I personally would like to see, Bitcoin correct so that new money can enter the market. It's very difficult for new money to enter the market when it's overextended because they're afraid to buy, right? So a correction, again, talked about this many times, but assuming that the top is in, which we do not know it is, this retest of the neckline, if it happens, could easily take out this high back here on a wick and then still come back down. But assuming the top is in, then our golden pocket's down around 68.78 through 71.54, right? So if we get back down to that level, it'll be interesting because I'll be retesting these levels of support back here, okay? So yeah, that's kind of what I'm seeing on Bitcoin. The video is fairly long, but I do want to show you guys a couple of cool things. So if we look at OMG, right, this big run up on OMG that was really good to me. Really all it did, and I know people are getting super excited about OMG. There's probably people buying tons of OMG right now, like all excited about it and everything. oh my God, OMG, $10 a coin, $9 a coin, when it was down to, 27 cents in March. So it's a 30x. It's a 30xer. It's a really big return. It's awesome. But the thing is what happens with people oftentimes, they just buy at the absolute worst times, right? They buy right at the peak of these things. And in this case, it's basically ran into two really magical levels. The first level was really easy to see, right? Is this one. This was basically the low in 2017. This was the lowest monthly close. It closed right around 81,000 Satoshis, right? And look where this stopped at. I mean, as clean can be. And that's one of the reasons I was a little salty when I woke up, because it hit that, and then by the time I woke up, it had hit it, and it had already pulled back like 40%, which for me, with the amount of OMG that I was holding, was about $9,000. Okay. So I was a little salty because I was like, damn, I could have got almost a whole extra Bitcoin. If I, converted over to Bitcoin, it would have been almost a whole Bitcoin for free, basically. But the other thing this thing did, and I talked about the 61.8 fibs on the way up in the last video, so I'm not going to regurgitate that. But the other thing this thing did was it actually hit at 61.8 on the pump, right? So again, we're talking about a longer time frame from early 2018 to here we are in the latter part of 2020, over 2 years. Going to put it on a log, and you can see it right there, right? Ran right up the golden pocket. Is from this yellow line to this purple line, right through there. Threw a wick into it, and then started to pull back, and it's now down right now about 38.25% from where it peaked at. It's basically been moving sideways for the last couple of days, right? And I'm not going to dig into the whole smaller time frames because it's OMG. It's just an alt. Unless you have it, you don't care. But what I'm talking about, the whole reason I'm talking about it all, is just keep this stuff in mind. When these coins start to pump, start looking for the really obvious places where there might be resistance, where it might be worth taking some profits. And then if you're a really big believer in the coin and you want to be a hodler, you can always buy it back if it dips, right? So in this case, you had this magical monthly resistance that lined up perfectly. I mean, perfectly with the 61.8. So, like I said, I was a little salty when I woke up because it was down big for me. But not down. I mean, I'm still up. My average cost on it was like 60 cents. But it's never fun to wake up and realize that a few extra hours of sleep cost you $9,000, right? And miss gains. So anyway, that's OMG, right? Just kind of a good example of what to keep an eye out for when you're trading those alts and when you're trying to stack Satoshis. Because this thing could absolutely still go up and go way up, and that's great. That's why I kept half of it, right? But it's also when you're stacking sats, you don't have that same fear of missing out when you're trading for dollars, because it's like, oh well, I'm still trading for Bitcoin, and if the market does explode, Bitcoin's probably going to go up too. So worst case, I'll just make a little less money versus completely missing out. So yeah, anyway, I was able to increase my roughly 2 Bitcoin portfolio up to 2.7 or so on that, by getting rid of half that OMG. So that was great, and maybe next time I'll be able to get the full move. So let's talk real quickly, because the video's far too long, but let's talk real quickly about the stock market, okay? So first thing I want to talk about is the Dow Jones. Yeah, I'm going to keep this super simple, right? There is a rising wedge on the daily. I'll go to the actual Dow to show you real quick. Talked about this in the last video. My wedge is gone for some reason. Don't know where my wedge went. Okay, weird. Anyway, there is indeed a rising wedge trying to form. It may or may not be a rising wedge. It's trying to break out the top of it right now. So it breaks out the top of it, it's going to invalidate this whole theory. But essentially, there is this wedge that I'm watching. Obviously, that is a bearish pattern. And when you look at the larger time frames, it would be exactly the type of thing that you might see in a downtrend with a really large dead cat bounce. So I'm keeping an eye on that. If you look at the weekly RSI, it's basically trying to break through resistance. So I'm going to keep an eye on that. And then if I zoom out one more level, this is the RSI levels that I'm really most concerned with. And basically, this is putting in a very clear downtrend. So depending on where August closes at in about 6 days from now, we'll see. We'll see whether we close above this, which would make me think there's more room to go up, or we'll see whether we close, right at it, where I think it's probably resistance and a move down is in order. If we go over and look at the Nasdaq is in a very similar situation, I think. Yeah. Here's the daily chart in this thing. It's actually, it looks like it closed above it. So tomorrow it's going to be, interesting to see whether or not that was a little false outlier that pulls back inside of it, or whether it continues moving back up into extremely overbought territory, right? So Nasdaq not as bearish looking as the Dow. The Dow's not really bearish looking either. I mean, it's not. It's just testing resistance, and we'll have to wait and see whether it breaks through it. And it's got that potential rising wedge. If we take a look, if I can talk at the S&P 500, same type of deal on the S&P 500. We have this, downward sloping line on the RSI. This is the monthly chart, and essentially we're just peaking above it here. The really, bad thing about this one that's a little different from the Dow is the Dow did not have bearish divergence on it. It was just lower highs on the RSI. But in the case of the S&P 500, obviously it's making higher highs on price while making lower highs on RSI, which is textbook bearish divergence. And those are never good to see even on smaller time frames, but you really don't want to see it on a monthly time frame, right? One of the reasons that I was able to, again, not predict, but one of the reasons I was able to warn of a possible move down in the stock market had to do with this monthly RSI in this chart, the S&P 500 chart. Back here on March 8th, I posted a chart saying, to watch out for this. And then, of course, it crashed, I think, on March 10th or 11th or something, a few days later. But we had this really nasty divergence, right? Where we had this high back here, and then it made this new high over here, and then put in a much lower high on RSI, and then you'd have this kind of spinning topish kind of candle, which is, can be a reversal signal. So, this is, still almost 7 days from the end of the month. So it depends a lot on what happens. But if this candle starts to pull back and has a wick on it, and it has bearish divergence on a monthly chart, and it's sitting at resistance, all those things paint a fairly bearish picture in my mind. And again, if you go look at the Fear and Greed Index, it's in the greed area, and that area that has typically been a good place for corrections, at the very least in the past. So the last thing I'll mention is the fact that, guys, make sure you do understand that we are in a recession right now. It may not feel like it. It may not seem like it because the stock market has been, ridiculous. I mean, we're looking at an S&P 500 that typically pumps, on average, gives about 9% returns, and it's up 57% in the last 5 months. Go look at the Nasdaq, it's up 75, 80% in the last 5 months. Go look at the Dow, it's up huge, right? These things have given more gains in the last 5 months than they typically give in a decade in some cases, right? So basically people have been able to make 10 years worth of returns in just 5 months. So all these people who have their retirement in there, all these people who, all that kind of stuff, they're all sitting high on the horse right now. And when you are making money hand over fist in the market, what you typically do is you want to buy more of it, right? You're excited about, oh my God, look at all this money I'm making. I got to get more money in the market. I got to get more money in the market. And that's typically what leads to the top, blow off top of a market cycle, right? A lot of people are euphoric right now. A lot of people have money just to kind of piss away, between making tons of money in the stock market itself, just because, let's be honest. If you had a $500,000 retirement account in there, right, that was worth $500K back in March, in a lot of cases, you're up $300,000-$400,000, right, in the last, 5 months, right? So people are getting way over exuberant, and I think eventually we're going to pay the price for that. But all that being said, we are definitely in a recession, right? And it's just a matter of time before, it's kind of like we've been gut shot and we're walking around with the bull inside us thinking we're okay, but we're bleeding inside, right? And I'm not going to go off on a tangent and start talking about gold and silver today, but just as an example, right? If you zoom in on this, what these gray vertical lines are, these are the recessions, right? It marks the recession. See, if you take them off, show recessions, boom. We have a gray line here that started back in March. Actually, it may have even been a little before that. Let's look. So according to this, the recession started right around February, right? And again, gold shot straight up. I know the stock market shot up, silver shot up, everything shot up, crypto shot up, right? But we are indeed in a recession, and I think eventually the other shoe is going to drop. So that being said, full disclosure, right? I always want everybody to know where I stand on things. Again, no plans to sell any of my crypto. It's worth a fair amount of money right now, but I'll ride it and I'll play the game. I'll stack the sats and I will use it as a hedge, just like I have gold and just like I have silver. And I think both of those are going to come down as well. I don't know how low on those, right? But it's like, if I'm holding a bunch of gold and a bunch of silver, I'm not going to run out and sell my gold and silver just because I think there's a pullback, because the whole purpose of having the gold and silver is because it's a hedge against my US dollars becoming so inflated that they become worthless. At least I have my gold and silver. So I'm going to kind of treat crypto the same way. I've got the Bitcoin hedge, or the crypto hedge. I've got the gold hedge. I've got the silver hedge. And, God forbid that the dollar does collapse or become hyperinflated, at least I have some money to live on. It would certainly devastate me financially. Don't get me wrong. It would, it's not like I'd still be whole, but at least I'd have money to buy some food, right? Put a roof over my head and my family's heads. So that's where I stand out. Hopefully this video helped you guys out, and hopefully you enjoyed it. Please remember that I am just some guy sitting in a spare bedroom. So nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency, precious metals, or the stock market. If you enjoyed the video, please be sure and give it a thumbs up. Please make sure you subscribe to the channel, leave me a comment, and of course, check the description for a link where you can join the Patron for just $7 a month. Helps us support the channel, helps to keep the videos coming, and gives you access to a lot more frequent updates. This is James with Crypto Common Sense, reminding you to please trade safe.